Okay, I have got some big news to talk about because Tesla have just released their latest earnings report. And in this earnings report, not only did they talk about earnings, they talked about the autopilot side of things with the robotaxi, which could potentially deliver $30,000 in gross profit per vehicle as passive sort of income for Tesla. They talked about where Tesla could be in the future, and Elon Musk made some interesting insights into Tesla stock as well. So this is going to be a great video. We're going to discuss everything about the earnings report and Tesla stock in this video, and it's going to be a great one. Ain't that right, Elon?
Yes. Right.
Yes. So we've got a lot to talk about in this video, and before we start, I do want to disclose to you guys that I am a Tesla shareholder, and I also wanted to disclose to you guys that you should drop a like on this video. Why? Yeah, I actually don't have a good reason why, but just drop a like, do it anyway. So right now, I'm just going to do a summary of the numbers in the earnings report. Let's start by getting straight into the revenue and the earnings of Tesla. So the loss per share, or the negative profit per share, was $2.90 versus the expected 69 cents. Yep, that's a pretty big difference. Then the revenue was 4.54 billion versus the 5.19 billion that was expected. Okay, so the revenue was not met and the loss per share was greater than expected. But Elon did say why this was greater than expected in the earnings call, and this was because almost half of their sales occurred in the last 10 days of Q1, quarter one, which means a lot of these had to be transferred to quarter two. A lot of these Q1 sales were moved to Q2. So obviously if the sale gets transferred over to the second quarter, you miss out on the revenue and the earnings for that first quarter. Does that make sense, guys? So anyway, Elon said that Tesla are working on balancing out these deliveries throughout the quarter, which will help with all of these issues. Okay, so we've got revenue and we've got earnings that weren't the best for the quarter. And as for cash and cash equivalents, Tesla ended the quarter with $1.5 billion of cash in their pockets. This compares to $2.2 billion in which they had the previous year. Now this difference came because they paid off a convertible bond payment, which is good. And obviously those end of quarter one issues, which resulted in sales in quarter two instead. Okay, now that we've done the revenue, earnings, and cash, I've got some very interesting things to talk about. Okay, arguably the main thing that we need to look at with Tesla is how their vehicle productions and deliveries are going. Is it increasing? Is it looking good? What's the demand like? So, roughly 63,000 Model 3s were delivered in Q1, which was around 3% more than the previous quarter. And you know, the Model 3, that is doing so well already, which we'll talk about soon, but now I want to talk about the potential that it has as well. Just look at this graph and see how much potential it has that Tesla expects. It can grow by about 4 times the amount that Tesla are already predicting. But the Tesla Model 3 it's not just potential, it's currently doing amazing numbers already. So as of today, Model 3 was yet again the best selling premium car in the US in quarter one, outselling the runner-up by almost 60%. This is not surprising given that for the first time in history, the price of an electric vehicle is lower than its gas-powered equivalents. Because just look at this graph here, with the average selling price for these premium vehicles. Yes, the Model 3 is the cheapest. But also yes, the other vehicles are close in price, but consumers want to purchase the Model 3, and it's no surprise why. Because you're getting all of this quality when you buy a Model 3, and you don't have to pay for petrol, which costs are rising for petrol obviously, and you know, you're also doing good for the environment when you buy a Model 3 or a Tesla electric vehicle. So it's a win-win for consumers, and this is why you're seeing Tesla selling so many premium vehicles, and the Model 3, it's the best selling car by 60%. No one's even coming close. That number, it's just crazy how much they are selling, and there's only more potential to grow. Okay, now we need to talk about probably one of the most important pieces of information about Tesla stock that has been released in a long time. And I don't know why analysts aren't talking more about this. And that is the autopilot function. This particular section of Tesla could become as big as Uber and Lyft put together, or even bigger than both of these companies. Let me explain this to you very clearly. Okay, at Tesla's Investor Day, Elon Musk released his autonomy vehicle plans. Basically, the Tesla cars that are currently driving around have the hardware to become fully autonomous, aka fully drive by themselves, no human needed. And by 2020, Tesla expects to have the first operating robo-taxi with no one in them. That's why they call it robo-taxi. Now, why is this such a game changer? Well, they expect to have 1 million robo-taxis on the road by 2020. That's what Elon Musk has said. So even if that number is wrong, let's just roll with that number for now. So, this is what Musk said with his plans with robo-taxis with regards to profits. So the expectation with price per mile is about 18 cents. The gross profit per mile is expected to be 65 cents. The annual mileage is around 90,000, which makes gross profits $30,000 per year per robotaxi. And the longevity of these robotaxis is about 11 years. This was literally the plan that was unveiled by Elon Musk not long ago at all, a couple days ago. So let's just think about it. If they get 1 million robo-taxis on the road by 2020, or maybe even later, 2021, 2022, or 2023, that's 1 million cars earning a gross profit of $30,000 per year. Now, if my maths is correct, $30,000 times 1 million cars, what is that? That's $30 billion per year. Crazy. So to put that into perspective, $30 billion, Netflix's gross profit is only $6 billion a year. So I'm not personally saying that it is definitely going to be achieved, these exact numbers. That would be crazy if that happened. In fact, I say the most likely option is that these numbers do not get achieved. But what? Even if they get like half of the expected numbers, what's that? $15 billion in gross profits? That's still double the amount of Netflix. And that's just for one segment of Tesla, the robo-taxi segment. You've got consumers who will still be buying all of the cars from Tesla, which is their main way of generating money. They will still have the power segments and all of that as well. So this autopilot segment is just a whole nother revenue stream. And yes, this robo-taxi thing, it is a big thing because it pretty much has the capacity to destroy Uber and Lyft and absolutely dominate the ride-sharing market. And this was really funny at the Investor Day. Elon Musk said it's financially insane for consumers to buy anything other than a Tesla because it's just so much more effective than other cars with so much potential. But yeah, I just love the way he thinks personally, even if he can be a bit extravagant. I mean, he even compared buying a Tesla to buying a regular car. He compared this to like buying a car to buying a horse back in the day. And with all of these features to the car, who knows, he may be right. Alright, this last segment, I want to talk directly to Tesla shareholders. So yes, revenue and earnings, they weren't the best. Both of them missed expectations. But then, on the other hand, the demand for this company's vehicles is unprecedented. The Model 3 is the most sold premium vehicle, and the demand for electric vehicles in general is just going up. And then, of course, we've now got potentially this whole new way of making money, the robo-taxi segments, which could literally destroy the ride-sharing industry and take over Uber and Lyft, because it's just going to be so much cheaper when you don't have to pay for the main cost to this industry, which is the driver. Because Tesla's vehicles have all the hardware to drive by itself. And by 2020, that was the prediction, Musk expects to at least have some regulators to allow this to be self-driven. So on one hand, you've got all of this potential for more revenue, more sales, more earning streams, etc. Then on the other hand, we do have to be a little concerned on the current finances of the company. And this is why for me, at least at the moment, my Tesla stock is still a swing trade. You know, throughout the past, at least, 2 years, Tesla have consistently been going up and down in price. And this is why I'm waiting for that to swing up again. But maybe one day I will go into Tesla stock for the long term. They definitely have the potential, but I just need to see some more results for me personally. I need to see some more stable finances, and I really want to see how this autopilot goes before I say yes, I'm definitely going to be in Tesla for the long term. And that, guys, should keep you pretty up to date with Tesla stock. Summed up short, so much potential, but it is still a risky stock.